Hello, I'm 𝗟𝗶𝗴𝗵𝘁 and today we are diving into the exponential moving average, a widely used indicator for identifying market trends. Let's explore how it works and how you can use it to advantage with LightningChart Trader. The exponential moving average gives more weight to recent prices, which adds a percentage of the closing price to a percentage of the moving average value of the previous day, making it highly responsive to changes in market trends, especially useful in fast-moving markets. The EMA is calculated using a formula that gives more weight to recent price changes. The multiplier determines how quickly the EMA reacts, making it a valuable tool for detecting trends early. When the price stays above the EMA, it suggests an uptrend, while dropping below the EMA indicates a downtrend. Customizing the time period allows traders to align the EMA with their trading strategy. A popular strategy is to use EMA crossovers. When a short-term EMA crosses above a long-term EMA, it signals a bullish trend, while a bearish crossover indicates a potential decline. With LightningChart Trader, you can easily customize your EMA settings to suit your strategy. Let's check how to write the EMA code, and after that I will show you how you can manage the chart without coding, just by a few clicks using LightningChart Trader. Let's take a look.